Good evening, VV Nation. My name is Ryan. Welcome to the channel. It's time for our 6 p.m. video. So, got to try to get you to make some money, keep you on the right side of the market. This week, let's be honest here, the market keeps pulling back. I'm looking at the Dow Jones down 386 points, the NASDAQ down 112. Salesforce reported earnings after the bell yesterday. I looked this morning, it's down 18%. So, a lot of concerns in the market right now. Now, in tonight's video, this is the whole concept. Why I am not buying the dip yet. I know since the rise of retail traders, since COVID, the mentality is buy the dip, buy the dip. Well, I'm going to give you some advice on buying the dip and how to properly time the dip. I mean, if you just keep buying as the market drops down, especially if you're dollar cost averaging, you're going to give yourself a big headache and it's all going to become emotional and probably not work out too well. So if you want to stick around, if you really want to learn how to properly buy the dip, time the market, and make some money, stick around. Let's get started. Now, if you missed the reason why the market's pulling back, this is it right here. The Fed's Kashari, this is the Minneapolis Fed president, said Tuesday he is still not ruling out interest rate hike, but it's more likely the central bank could hold rates for an extended time. Yeah, I don't see interest rate hikes occurring unless inflation ticks up, but that, again, is data dependent. However, the whole reason we rallied since the holidays is because the Federal Reserve came out and said that there's potential for interest rate cuts in 2024. Well, it's almost June and we're still waiting. The data is just not pointing us in that direction. So let's go ahead and jump into the VectorVest 7 system and see what our proprietary market timing indicators are trying to tell us. Now, as normal, I like to start off at the home page in the VectorVest 7 software to get a sense of market direction. You can see the major indices all down today. The VectorVest composite fighting against the market right now of 0.25%. Kind of surprised about that. But look at the timing gauge. It is neutral and VectorVest does not advocate buying any stocks at this time. Now, a couple things I do want to point out. Two in particular on the homepage here is going to be the BSR and the MTI. Now, if you've seen these videos before, if you've been a subscriber for a long time, you've probably heard this concept that these indicators typically can tell us when the market is looking for a bottom. Now, as far as the BSR, the buy-sell ratio, this determines the overall health of the market. Just a simple ratio. We track over 9,000 stocks, so it compares the stocks with a buy rating to those with a sell rating, and typically bottoms out around 0.2. Now, if we take a look at MTI here, this looks at the underlying trend of the market, and typically when the MTI gets around 0.6, the market is looking for a bottom. I'm not saying when the BSR MTI hits right at 0.6, jump all in, but that is a good time to at least get your shopping list ready, see if there's anything turning around in the market to give us sentiment to actually be buying. And the VectorVest 7 software is so easy, the gauge will go into the green once we see the market turn around. Now, in the color guard itself, you do see the trend column here. The primary wave is down. That's our fastest moving market timing signal. And the second column, which looks at the MTI, the underlying trend of the market, is also down at this time. However, look at the confirmed call here. We're still in a confirmed up situation. However, we could get a confirmed down at any point this week if the VectorVest composite continues to move lower. Now, the last time I did a video on this was just over a month ago. I think it was titled Bottom Fishing. Check out the YouTube channel. Came out around mid-April. Now, I don't have any crystal ball on telling you, what's going to happen, things like that. I just, take the data from the VectorVest 7 system and try to think about it logically. So diving in here, we can see that the MTI around this point, this is April 19th, the MTI is at 0.67, and look at the BSR here coming off its low of 0.25, but by that day it was 0.28, so it's starting to turn around. So the first thing you want to look at in our fastest moving market timing signal, we can see shortly after we did get a primary wave up signal as of April 23rd with a nice rally to follow suit. We did get a little chop in the market here, but shortly after, another primary wave up signal, just confirming the market's move to the upside. Now, you can see the primary wave is down currently and still is. So as long as that primary wave is down, I am not a big advocate of, buying stocks, buying the dip, dollar cost averaging, more so protecting profits. So that way, when the time comes and when it's appropriate to redeploy those assets into the market to be profitable. Now, I've started my journey at VectorVest since 2014, so I've been here for quite some time, 10 years. I've had a great learning experience, and one of the biggest things I can actually ever teach someone is having patience, which takes discipline. So those are the two big things that I would recommend every investor to focus on is discipline and patience. It will only help your portfolio going forward. Now, make sure to stick to the end here in just a few minutes. I am going to give you a list of stocks to potentially put on your shopping list for when the opportunity presents itself. For my current subscribers, you know exactly what this is. This is the DEW layout that coincides with our DEW timing signal. You can see over the last 6 months, does a great job of keeping you on the right side of the market, letting you know when the market is pulling back and when the market is starting to rise again. Now, my big concern here is we see that the price of the VectorVest composite dropped below this 30-day weighted moving average here. Now, the only thing we're waiting on to get a DEW down signal is the DPO or D-trend price oscillator to go in negative territory. You see it's pulling back quite a bit here over the last 2 trading weeks. In addition, down below, we do have our MACD here. This is not generate signals for the DEW, just gives a sense of bullish and bearish trends. You can see the MACD line cross below the signal line just a few trading days ago, and the histogram bars in negative territory right now. So just by looking at these basic technicals and seeing the bearish nature of them, that's another reason why I'm not just pulling the trigger and continuing to buy on this dip, as I see better opportunities presenting themselves in the near future. Now, before I give you the stocks, I'm telling you right now, don't just go out and buy these as soon as you watch the video. That was not the point here, right? You'd be buying the dip still, right? And the market seems to be still dipping. So we want to make sure that the market's got some signs of turnaround. Now, these are the couple signs you want to look out for. Simply green light in the price column of the color guard. You know, definitely wait for some follow through the next day. If you see 2 green lights in a row, it's a great sign. And as well, the other first thing that'll appear here is that this component in the trend column that's currently down, again, that refers to our primary wave. That's our fastest moving signal. That would go to an up. All right, take your screenshot, record it, do whatever you got to do. Take a photo. These are the 5 stocks I got for you. We've got Dorian LPG, Tudor, Crocs, Zim, and Rolls-Royce. Now, this is something to take note of. With the market down as much as it is right now, all of these stocks are bucking against the market right now. You can see the leader, Dorian, up 3% on a down day. All of these stocks have buy ratings. And if I scroll over here to the industry, you can see very diverse group here. I've got transportation ship, heavy construction, apparel, shoes, another transportation ship company, and Rolls-Royce being the aerospace and defense. And if I scroll over back to the left, you can see for the most part, these stocks here are undervalued. If we take a look at LPG, prices at $49, we value it at $67. Tudor's at $22, we value it at $25. Crocs, $154, we value it. Zim is the only company in the list that is currently overvalued right now. Trading just about $21, we value it just shy of $14. Now, Rolls-Royce is probably one of my favorite stocks on the list here, currently trading at $568. We value it almost $10. So from a valuation standpoint, that's almost one in the bag right there. And you know, I'm a big promoter and believer of the nuclear renaissance. Well, Rolls-Royce has stepped in the space with a compact reactor, thus giving me belief that this company has many reasons to soar in the future. Now, if you've enjoyed the video, if you like these stocks, make sure you hit that like button and just be patient. Don't fall for that buying the dip mentality. Good night.